All right. Hello, everyone. Happy Monday. Welcome to your weekly market check-in here with myself, Greta Wall. I'm your host, and I'm joined by Derrick Oldensmith, the head trader at T3 Trading Group and leader of T3 Live's Pro Desk virtual trading floor. Before we get into any market-related discussion, here's just a quick disclosure of Derrick's positions as of our recording here today. Again, he is the head trader at T3 Trading Group. All right, so Derrick, the title of our stream today is Oil Surges, Stocks Drop, which was the case when I wrote the title. Oil's still up big, but stocks have recovered quite a bit since the morning lows, since the open. The Dow, though, is still being dragged down some by Goldman Sachs, but not even much at this point. So on a Monday, after we had a failed Iran ceasefire peace talks over the week, not ceasefire, but peace talks over the weekend, how have you navigated this morning? It's been a big reversal, obviously.
Yeah, it's really impressive how well the market has held up. Overnight futures, I think I saw the S&P futures at one point down like, I don't exactly remember, 1.3, 1.4%, something like that. So we were looking like we're going to have a pretty big gap down this morning at one point last night. By the time I woke up and logged in around 5 a.m. Eastern, we were only down 0.5%. And now as we're talking, the market's up 0.3%. So it's been a hell of a recovery, especially considering that oil is still up 5%. The recovery in the market is definitely exceeding my expectations today, though it's not overly surprising because we know from the data that there's just a huge systematic bid underneath the market. That's still a result of the large gap up that we had on the ceasefire news. So that gap up that we had on the ceasefire news caused the trend following algorithms, these CTA trend following algorithms, to gap above their buy points on basically on multiple time frames, their short time frame, their intermediate time frame, and their long time frame all at once. So it created a vast systematic bid that started last week with that gap up, and it's continuing this week. By my estimates through Goldman Sachs, in a flat or an up market, we're expecting like $8.5 billion worth of S&P futures to be bought every day this week. So it creates a massive bid underneath the market that has a huge stabilizing effect into any down move. But still, the news over the weekend wasn't great, and I would have expected us to be down a little bit further. So I've had shorts on. I've been very bullish on the market, but I've had shorts on anyway as just a little bit of a hedge of the extension. So I've got longs on, but this market, once we had that gap up on the ceasefire, has just been so consistently extended to the upside. We kind of had 3 days in a row, Wednesday, Thursday, Friday, where the market was at my levels of extreme upside extension, which for me means not only should I not be buying, but I can potentially look for shorter term shorts to take advantage of that extension. And then into the gap down this morning, I was able to liquidate some of that, but I thought that I'd be able to get a little bit more, which obviously turned out to not be true, and now the market has recovered. The flip side is I also started really on Friday, but a continuation of it this morning, to look for software to bounce. And in my morning meeting today, I was like, guys, with where the market's opening, I don't have a lot of conviction in the market or things that are highly correlated to the market, because I want us to be a little bit lower to do any significant buying. But if you want it to be short, you needed to be shorting on Thursday, Friday last week. But I really like software long. So we talked about IGV long for today, now long for today, CRM, cybersecurity names, Adobe, Snow, Shopify. It was kind of just one software name after the next. So that half of the trade is paying really well. But the other half of the trade, where I've got these cuter, shorter term shorts on in the indexes and in the semiconductors, that side of that trade gave me an opportunity to book some profit this morning. And since then, it's just been right back on the bid throughout the entirety of the day today.
When it comes to the, obviously huge recovery we've seen today, what does that say to you about how this market feels about, one, the war and whether there's going to be a resolution or if the market even cares at this point, and then two, the oil market and the impact on the equities market now?
Yeah, so I mean, we're just very, very bullish. I've kind of adopted this saying, and the people on my team have probably heard me say it. Like, people like to say, "Don't fight the Fed." I like to say, "Don't fight the flow." So if you can kind of study and understand, like, the systematic bid that's in this market right now that has maintained our strength into the end of last week and maintained our strength this morning, it does not care about the price of oil. It does not care about Iran. It doesn't care about the United States. It doesn't care about Trump. It doesn't care about Israel. It doesn't care about anything. All it cares about is doing what it's designed to do. And right now, it's programmed to buy. And you just don't want to fight that for more than maybe a shorter term small trade in certain scenarios. So we're staying really bullish. It's interesting also, I guess, more bigger picture. Usually with these types of geopolitical situations, from my experience, the market has big reactions to it when they first happen, but then the market kind of gets bored of it. So you start to see like diminished reactions to new news as time goes by. This situation you would think is a little bit different because the price of oil has a direct impact on the economy. So if this geopolitical situation with Iran is going to continue to move oil, which is taking a little bit of a hit right now as we're chatting, but is still up 4%, that's going to continue to have an impact on inflation expectations and on the economy and economic growth more broadly. So you would expect this type of situation to actually have more of a
All right, it appears we've lost Derrick. I'm going to try to get him back online, and we will be right back.
Hey.
You're back.
Can you hear me?
All right, you're back. I hear you. All right. All right, so you're talking about price of oil and the market reaction and the impact.
Yeah. Basically, I was just saying that you would expect this geopolitical situation to have more of a continued constant impact on the equity market. And we are seeing an interesting decoupling of that right now with oil up 4% and the SPY's up 0.3. However, I just circle back to the systematic bid in the market that's continuing to hold us up. And right now we're getting some relatively positive commentary out of Trump as we speak.
All right, so we are officially starting Q1 earnings season. This morning we got Goldman Sachs report. Tomorrow will be the JP Morgan, Citi, Wells Fargo. Wednesday, Morgan Stanley and Bank of America. The Goldman Sachs report this morning blew it out of the water. It was a great report, but the stock was down. I think mainly the blame was the loan loss provisions were up 10% year over year, which was the second biggest increase in loan loss provisions since 2020. And so that's an alarm for the market. What is Goldman Sachs expecting in the credit market in the months ahead? So when it comes to the Goldman report and then the rest of the banks reporting this week, what did you think about the Goldman report? Second highest equities trading revenue on record for the bank. They're obviously an investment bank, so they rely more on the trading and investing side of things than some of the other banks do. And then what's to come this week? What are you focused
on? Sure. So the banks are always like a little bit of a warm up for earnings season. Just kind of gets you ready, gets you excited, but they're really not like the most important earnings reports, I don't think, anymore. It's big tech. It's anything that's related to the AI trade is going to be what's most important. With that said, the private credit situation is
All right,
Hey.
you're good. All right,
Sorry
so you
about
said the private credit situation, and then you froze.
So the private credit situation is one of the main like bear cases that people are pointing to. So it's always kind of worth paying attention to the broader potential, let's call them gray swans, that exist, for kind of lack of a better term, like things that we should be paying attention to if they were to get bad for some reason, could have a major impact on the equity market. And right now, those biggest things, there's really three of them. One is the United States-Iran situation and the impact on the price of oil and the impact on the economy, which we were already talking about. Two is the private credit situation. And three still continues to be the AI story. In other words, will the AI CapEx spending actually deliver insofar as returns on the spend that they're actually doing? Those are the three major things. So whenever you get an update on any of those three major things, you need to pay close attention to it. So the fact that Goldman is allocating more resources towards the potential of higher losses, that is something to note. I still think that the big banks in particular are insulated from this. I think that they're just too big at this point, and they can absorb the losses with the cash and everything that they have on their balance sheets. If it gets to that point, you could have, maybe some one-off bankruptcies like a Blue Owl or something like that. But honestly, I don't even think that Blue Owl is going to go bankrupt at this point. And I actually think, Blue Owl is squeezing right now. I mentioned this pre-market to my team this morning. I almost want to buy a little of this owl right now as we're talking. I think that at some point, Blue Owl is going to give a really big short squeeze. And it might even have just started 10 minutes ago. There's some big volume that's coming in, and this thing is up 3% and kind of squeezing higher. So I kind of like that trade, to be honest, for a shorter term trade. If you see the volume coming in to buy some owl and see what it can do. And again, with the banks, it's notable that they're saying that, but I don't think it's going to be a systematic issue at all.
Sorry, I was muted, but I am here. All right. So then when it comes to Q1 earnings season as a whole, the first big tech company does report this week. That's Netflix. They report much earlier than the rest of big tech. The majority of Mag 7 is 2 weeks from this week. But when it comes to this earnings season, you and I kind of give expectations for earnings season at the beginning of every earnings season. And I thought the last 3 or 4 have really been very similar on what the market is looking for in the reports. And it obviously depends on where stock is headed into the report and et cetera, et cetera, et cetera. But what are your expectations for this earnings season? Any little wrinkles that you're looking for in these reports? I think definitely the Iran war. And if anyone has anything to say about the impacts of that, could definitely be important. What about you?
Yeah, so one of the things I think is really notable going into this earnings season, and I don't think enough people realize it, is that the market has gotten very, very cheap. We just had the market give a pullback. I think at lows we were down around 10% in the S&P, so about a market correction. But it's while forward earning expectations have been increasing. So this market has actually gotten very, very cheap, especially maybe not the market as a whole, it got cheaper, but some of these Mag 7 stocks have gotten very cheap in terms of their forward PE multiples at those March lows. Because while the market was going sideways before the pullback between October and February, the market was actually getting cheaper as it was going sideways. And then the pullback occurred while earnings expectations continued to rise. So I actually think that we're going into this earnings season with a solid tailwind behind us to boost us up on decent reports, because things have gotten so much cheaper. So that's kind of my expectation at this point.
All right. And then you mentioned Blue Owl, but when it comes to today on a Monday after a huge reversal higher, any setups that you are looking at, any charts that look interesting to you?
Sorry, I'm trading so hard while we're
talking good.
Because Trump is talking and this market keeps moving all over the place. What was the question? It was on charts that I like. So
yeah, any setups or charts that you like right now.
So I'm really bullish, but I don't believe in chasing extension. That's the most important thing. And this market continues to be extended. So I've got longs on. I'm sitting on those longs. You know, the other thing, I really like the semiconductors, just not here, not after the move that they just gave. You needed to be in those already. And I was long AMD, which I now liquidated as of Friday. I'm still long NVIDIA. I'm really bullish on this NVIDIA. I think it's a matter of time before this thing makes all-time highs at this point. The chart is approaching this really key 193 resistance level in NVIDIA. If we start to hold above that, I think NVIDIA is going to be completely off to the races. But looking at the SMH ETF, it's just so extended right now that I'm actually short SMH, I'm short SOXL, I'm short the indexes as shorter term trades off the extension while being long NVIDIA and while having this bigger picture bullish take, just because the extension here is getting a little bit silly. I also shorted Marvell today. The Marvell extension, I mean, this thing has been green every single day in the month of April so far. It's just like some of these things are getting a little bit ahead of themselves. And you could say I'm breaking my own cardinal rule here of don't fight the flow, which I am, but these are shorter term trades off of the extension.
All right. All right, Derrick, I know you're really busy trading, obviously, and Derrick is a real trader. So any final thoughts before I let you go today?
I think that this market is going to continue to work its way higher. I think that the United States and Israel are going to figure out how to get a deal done, and that things are going to just continue to improve from here. But again, just be careful on chasing extension, because that tends to just set you up for bad risk reward situations, and we obviously don't want that.
All right. All right. If you would like to work with Derrick and T3 Trading Group, you can go to t3live.com/DOLive, fill out that quick application there, and somebody, or fill form there, and somebody will be in contact with you. Again, Derrick is the head trader at T3 Trading Group, so all T3 Trading Group traders do work with him on a daily basis. Again, that's t3live.com/DOLive. Derrick, have a great rest of your Monday and a good week, and we'll talk next week.
Thanks a lot, Greta. Talk to you next time.
All right, bye.